Welcome back to the F word, where the F stands for fraud, not what you were thinking.
Speak for yourself. I'll feel like you're already disappointed about half the audience.
Oh, well, Dave, in today's episode, it's going to be a good one. We're breaking down the difference between your normal accountant and your forensic accountant, such as yourself.
Otherwise, also known as the difference between someone who files your taxes and someone finds out where you hid the money that you did not declare.
So let's start simple, please. For a normal accountant is focused on keeping things clean, compliant, and organized.
Yes, they're the everything is fine people.
Mhm. Exactly. They prepare financial statements, do tax returns, help businesses stay compliant, and track income and expenses.
And importantly, they're looking at the big picture. They're checking whether the numbers overall make sense.
Right. So they want to know, does the cash in the bank look reasonable? Are accounts receivable roughly correct? Are accounts payable in the right ballpark?
Yeah, they're definitely not digging into whether every dollar was spent properly, and they're not asking whether when you spent the money, you got value for money. And they're definitely not chasing small amounts that are quietly slipping out the back door.
Because their job is not to investigate, right?
No, their job is to answer a much bigger question. If somebody was to look at those financial statements and decide to invest in the company, would anything that was wrong with the financial statements materially change that decision? Or are those financial statements accurate enough that they can make that decision?
So it's about reliability at a high level, not forensic accounts, well, not forensic accuracy at a transaction level.
Exactly. They're like the personal trainer of your finances. Drink water, stay disciplined, and do not do anything stupid.
And ideally, you listen to them, right?
Well, and now forensics accountants.
I know this, completely different. They do not assume things are fine. They assume something is off, always.
Yeah, you're quite right. They're basically financial detectives.
Exactly. And they investigate fraud, they trace missing money, analyze suspicious transactions, and prepare evidence for court.
So if a normal accountant says, here are your numbers, a forensics accountant may well say to you, those numbers are lying.
And then proves it.
Yeah, quite often they prove it.
So, this is not just dramatic, this is real. According to the Association of Certified Fraud Examiners, businesses lose about 5% of their revenue to fraud every single year. The average fraud case costs over $1.5 million, and their latest global study analyzed 1,921 real fraud cases across 138 countries.
Quite right. The SFE shows that it's not a small problem and that it is actually a business model.
And it gets worse. 43% of fraud is only detected because someone tips it off. That means that most fraud is not caught by systems, it's caught by people.
Yeah, there's some quite interesting stats that come out here. For instance, only 5% of all fraud is caught by the external auditors. And yet that is the main control that people use in order to think that they're of investing in a company, and they think that an audit actually covers fraud. It doesn't. So if your company isn't really safe. If you don't have fraud, you're just lucky.
Is it like the day? I mean, also, more than 50% of fraud happens because of weak or overridden controls.
Translation, somebody said not to worry, I've got this, and everybody believed them. Remember the fraud triangle.
Definitely. And whenever anyone says don't worry, that's when I actually start to worry, to be honest. Let's simplify it. An accountant prevents problems, a forensic accountant investigates problems.
The accountant is, let's keep everything right. Forensics accountants are more, let's find out what went wrong and who did it.
And one more thing, forensic accountants do not just look at numbers.
No, they look at behavior, patterns, timing, and intent.
They are part accountant, part detective.
and part therapist, because somebody always ends up crying.
Is it you, Dave?
No, normally it's the client.
Hold on. Okay. So here is the uncomfortable truth. Most fraud is committed by employees or insiders, not random hackers.
Yes, it's not always some guy in another country. Sometimes it's Kevin from accounts,
Never trust a Kevin. And the longer fraud goes undetected, the more expensive it gets.
which is why forensic accountants exist, because by the time you call them, it's already normally very messy.
So if you're wondering which one you need, right, and if everything is running smoothly, you need an accountant or that you know of.
And if money is disappearing and nobody knows why,
Well, then you got to call a forensic accountant.
and maybe do not tell Kevin.
Never tell Kevin. So that's it for today's episode of the F word.
Where we make fraud slightly less boring and slightly more terrifying.
And if you learned something, share this with someone who thinks fraud will never ever happen to them.
Because statistically speaking, it probably already has.
See you next time.